So for this mock exercise, we're going to take a look at a company called Forensi Group. And this exercise requires us to classify the individual accounts, and we're going to prepare a balance sheet or an actual equation, A equals L plus SE. But before we get to the question, I thought it would be good to review a couple of concepts. So first of all, in the statement of financial position, sometimes called the balance sheet, we have essentially three elements. We need to report the assets of a company, and the assets are defined as things the company owned and control. So the word own and control is extremely important. And that's what we classify as an asset. On the balance sheet, we also need to classify or to showcase what are the liabilities. And liabilities are debt or obligation that resulted from past transactions. So that's the key word, is past transaction. And it has to be related to the benefits received. So benefits received today that will be used up in the future resources, i.e. cash will be paid, will be used to pay for that benefit received today. So the key definition for a liability is it has to be an obligation. It has to result from past transaction. It has to result in future resources, consumption of free resources. So as an asset, it's things that the company own and control. Those are the two key concepts. Now, on the other part of the statement, it's called shareholders' equity. And shareholder equity is composed of share capital, which is the amount financed by the owners, and all the earnings that have accumulated in the business, and that's called retained earnings. So that's what makes up the balance sheet. Now, if I look at the balance sheet from a different point of view, I can see that we can summarize it through a basic accounting equation where A equals L, liability, plus shareholders' equity. And A stands for economic resources the company has access to, that has access and control. And you can look at this equation to show that these assets are being financed by two stakeholders: the creditors, the lenders, and the equity, the shareholders. So let's take a look at this question. So this question, they gave us a list of different accounts and amounts. And the first question asked is, classify each of these elements as either A for asset, L for liability, or SE for shareholders' equity. Then part B asked us to use the accounting equation by calculating the amount of asset, liabilities, and shareholders' equity. So it's asking us to use the accounting equation I showed you earlier and to see that this is essentially the basic accounting equation which shows what the financial position is of a particular company. All right, so let's take a look. So accounts payable and accrued liabilities, that is a liability. That's an L. Okay, because it's something that a company owes, and that's an obligation. Next one is called accounts receivable. So the word accounts receivable is made of two words. Receivable is something you're going to get, so a benefit to be received. And accounts means these are basically your customers, your accounts, your customers. So this is an asset because that's something you have control over, and that's something that the company has the rights to receive, something that they own. Now, capital asset, that's also an asset because it's something that is permanent or long-term in nature. It's something that they can utilize. So for example, capital assets, an example would be equipment. Equipment is used to help generate revenues, to help generate income. So that's why it's called a capital asset. Cash, definitely it's an asset. Goodwill and other intangibles. So we'll have other videos to explain what goodwill and other intangibles. Essentially, goodwill is something that the company has that provides a competitive edge, being in that business. So goodwill is reputation, perhaps, or perhaps a location, a store location at a mall, or an anchor store in a mall, etc. That's what we call goodwill. Other intangibles are essentially things like patent, trademark, anything that's you're not able to see physically, but that does provide future economic benefits, so that's definitely an asset. Inventory. Inventory is something that a company owns that is for sale, and therefore that is an asset. It meets that definition. Long-term debt, again, that's a liability. Okay. So before I move on to the next part, maybe what I should do is I should write down the equation A equals L plus SE as that basic equation for part B. And I'm going to start writing down the different classifications. So the first one's accounts payable. So accounts payable, I'm going to short form as AP. I'm going to put 279,910. Next one is accounts receivable. I'll put the short form AR. So I'll put AP here and AR so you guys can see where I got that number. 75,506. Capital asset is definitely an asset. Okay, that one's 188,621. Cash is an asset, and that is 47,484. Goodwill, so I'll short form that as GW. Okay, goodwill is 89,335. Inventory is an asset, as we said earlier, and that one is 319,445. Long-term debt is a liability, so I'll put that as LTD for long-term debt, short form. So moving on to the next column, you'll see other asset. Obviously the word asset's there, so it's got to be an A, an asset. Okay. That would be 20,072. Other liabilities, that's definitely an L because it says liabilities in there. Now it says other shareholders' items. Okay, so this is part of shareholders' equity, so I'll put SE beside them. And other shareholder items could be anything that relates to profit, relates to a dividend, for example, are examples of what we call other shareholders' equity. And that's definitely on this side of the equation. So I'll put down other SE, and that's a -8. That is what we call, it's a -8, which means in the language of debits and credit, that would be what we call a debit adjustment to shareholders' equity. We'll talk a bit more about why that's a debit in other videos, but certainly in this case, we need to put that on the SE side. Next is prepaid expenses. So the word expense should be a trigger to say, well, if it's an expense, it's something the company has already consumed. So for example, rent, insurance, wages, those are examples of expense. But the word prepaid in front of it signifies that the company has paid in advance for those services. So for example, if the company paid 12 months worth of insurance on January 1st, for the fiscal year, then they've obviously haven't consumed the expenses yet, so therefore it's sitting as an asset called prepaid. So the word prepaid signifies it is something that a company has access to that will provide future economic benefit and it has control. So the fact that they paid in advance means that they have the coverage for the next 12 months. So that's why that is an asset. So I'm going to put down the word prepaid here. I'll put that down here on the asset side. Retained earnings, we said that shareholders' equity is made up of two components, the amount financed by owners, and those are called share capital, and any earnings that have accumulated in the business from the time the business started that hasn't been paid out as dividends are called retained earnings. So the word retain is company has decided not to pay it out as dividends, the earnings as dividends. That's why it's called retained earnings. And that is shareholders' equity. So let me put that down on this side. So I'm going to short form retained earnings as RE and share capital as SC. So if I try to add all of my assets, if you add this all up, you get 754, 964. And if I add all my liabilities, I get 399, 481. And my shareholders' equity is 355, 483. And you can see when you add these two together, it equals A. So that's the beauty about accounting, is that every the balance sheet should show the equation A equals L plus SE. There has to be this equality because we know that accounting is all about a double entry system. So every transaction has at least two accounts affected. So by that nature of rule, then we know that we at least, if we do our jobs right, the equation should balance. Okay, thank you. Thank you. Remember the word thank you.